Welcome to The Explainer. We're seeing a massive shift right now in how people actually handle their money. Today, we're going to dive into exactly how Americans are strategically navigating economic uncertainty, fluctuating interest rates, and a rapidly changing world to build long-term wealth in 2026. If you've been wondering how people are actually securing their financial futures right now, you are in the perfect place. So let's just get right to the elephant in the room. In an era of economic uncertainty, how are Americans actually building wealth in 2026? It's the question literally everyone is asking right now. With the economy constantly shifting, what are people actually doing with their money? Well, the answer is moving dramatically away from asking what single stock to pick and shifting entirely toward how to build a resilient master strategy. Here's our roadmap for today's explainer. We'll quickly hit the 2026 investment landscape, then dive into AI and tech growth, stability through ETFs and dividends, real estate and crypto, the massive retirement education boom, and finally, the true power of diversification. Let's get into it. All right, part one, the 2026 investment landscape. Look, investors aren't just throwing darts at a board anymore. Today, it's all about finding that sweet spot, opportunities that give you real growth potential, but also long-term financial security even when things are changing at lightning speed. It's about being proactive, adapting to those crazy technological innovations we see in the headlines every single day, rather than just reacting to yesterday's news. Which brings us to part two, AI and tech growth. Artificial intelligence is completely spilling over the borders of Silicon Valley. We're talking fundamentally transforming healthcare, finance, transportation, education, the whole shebang. Because it's spreading across literally every industry, tech stocks had become an absolute undeniable core of long-term portfolios. It's truly everywhere. But here's the really fascinating part. Investors are looking past just the flashy software apps. The real money? It's pouring into the heavy lifting stuff: cloud computing, semiconductor manufacturing, and automation technologies. It's like the old saying goes, during a gold rush, you want to be the one selling picks and shovels, right? These sectors are exactly that. They are the actual physical building blocks of future innovation. Of course, as any seasoned investor knows, going all in on high-growth tech is way too much of a roller coaster for most of us. You have to balance out that rocket ship growth with reliable, steady, passive income. Let's take a look at how investors are managing that exact balancing act. Moving right along to Section 3, Stability, ETFs, and Dividends. Enter exchange-traded funds, or ETFs. Why do these matter so much to you? Well, they let you capture the growth of the entire U.S. stock market with basically zero sweat. You get instant diversification, super low fees, and you don't have to glue yourself to a monitor watching individual stock tickers all day long. It's the ultimate set-it-and-forget-it foundational layer. And because market volatility is always lurking around the corner, people are seriously hunting for reliable passive income. That's exactly why dividend investing is having a massive resurgence. By targeting companies with rock-solid financials and consistent dividend payouts, you keep cash flowing into your account, even when the broader market gets choppy. You're ensuring steady income regardless of the economic weather. Okay, part 4, real estate and crypto. So high mortgage rates have obviously made traditional home buying pretty tough lately, but real estate investment trusts, or REITs, are completely changing the game. They let you tap into real estate income and property appreciation without actually having to go out, secure a massive high-interest loan, and buy a physical building. It's a brilliant workaround. Now, think about this dynamic. On one side, you have the physical, tangible bricks and mortar of real estate. On the very opposite side, you have the digital frontier of cryptocurrency. It's a really unique dual approach we're seeing, utilizing tangible assets for steady income paired with digital assets like Bitcoin acting as a modern economic hedge. And wait, before you think crypto is just a wild, speculative gamble, things have completely changed. Major financial institutions are actually accepting and integrating these digital assets now, and that has absolutely skyrocketed confidence for long-term investors. Everyday people are actively carving out a measured slice of their portfolio for established coins like Bitcoin, specifically to hedge against future economic curveballs. Next up, Section 5, the retirement education boom. Across the board, we are seeing a huge surge in retirement contributions, specifically your standard 401ks and IRAs. People are making a very conscious choice to prioritize their future financial security over buying stuff right now. It is a massive cultural shift toward delayed gratification and long-term planning. And the real catalyst for this behavioral shift? Honestly, it's the smartphone in your pocket. Social media, podcasts, and online platforms have completely democratized financial education. You don't need to rely solely on an expensive, traditional advisor to get started anymore. Younger generations are learning the ropes online, empowering them to begin building their wealth way earlier than their parents ever did. It's pretty incredible to watch. Which brings us to our final piece of the puzzle, Section 6, the power of diversification. When you put it all together, the 2026 portfolio is beautifully diversified. We're talking stocks, ETFs, real estate, bonds, dividend-paying companies, and carefully selected digital assets. Nobody is putting all their eggs into one vulnerable basket anymore. Modern investors are spreading it out across this balanced venue to heavily reduce risk while keeping the door wide open for growth across totally different sectors of the economy. So, how do you actually execute this? The winning strategy basically boils down to three things: patience, discipline, and consistent investing. The sources make it crystal clear. Following this step-by-step process dramatically outperforms anyone trying to time the market or guess what happens next. Because at the end of the day, the most successful strategy in America right now isn't about chasing a quick buck. It's about building sustainable wealth through continuous education. By systematically blending high-growth AI, rock-solid dividends, and alternative assets like REITs and crypto, the American investor has totally ditched the lottery ticket mentality for a real, sustainable game plan. So I'll leave you with this to chew on. The market? It's always going to change. But your strategy absolutely doesn't have to. Are you chasing quick profits, or are you building sustainable wealth? Take some time to look at your own portfolio and reflect on that today. Thanks so much for hanging out with me for this explainer, and I'll catch you next time as we continue to break down the complex trends shaping our world.